Hey guys, Mike here. So another interesting day in the market. Obviously, red day today, but of course, what's happening every day now? You're getting this economic data coming out. It's not looking very good. That affects yields, which we'll see. That affects the dollar. That affects the market and everything. And then of course we go red, and oh, there's going to be a big sell-off. And then of course the market bounces back. Shocker there. And I'm going to show you why that's happened. So I got a lot of data in this, so just buckle up for crying out loud, because I'm going to throw a whole lot at you now. And especially what's coming up next week, so pay close attention. Now, the job data comes out. Obviously, as you can see, they're like, oh, cool. It actually decreased to 9.93 million. That's great. Hires decreased slightly to 6.16 million. You can see that huge gap between those, and of course, we've never even come close to that. I mean, it's double what it's ever been in history, basically, is what you're looking at here. And so, but it is coming down, so maybe the effects are taking place, right? And of course, then you had manufacturing, new orders, including transportation, come out. And the bottom line on this, you can see what's the trend. The trend is down, right? It's sloping downwards. And so that's really the main thing to understand about this. Again, you look at the other times, we've had big drops. They've basically been recessions. You see 08, the dot-com bubble, 2015 when the market went down. There was no recession there, of course. But again, you're kind of getting this just slow, death by 1,000 paper cuts trending down on these new orders and stuff, which means the economy is slowing, slowly but surely. And then when you come in U.S. manufacturing new orders year over year, yeah, you're getting basically the same thing. And at the bottom, you got total month over month. But again, this slow bleed out here, but no big spike down yet, right? If we have a recession, that's when you'll probably see the big spike down. And that's what everybody's kind of waiting on. But right now, that's just not happening. It's just a slow decrease. And of course, I think this meme says it all. And it says, don't know if bad news is still good news or not. And so you just can't really tell. And you can see second day in a row, when the economic data hits, the yields fall off a cliff, right? There's a 2-year. Here's the 10-year. It's basically Groundhog's Day all over again, right? This is exactly what happened yesterday. Now, of course, what's crazy is, where's the volatility at? Not in the stock market. You look at the VIX, right? There's not much going on. It's sitting at 19 today, I believe. But look at the volatility, what's happening with yields. I mean, we hadn't seen this since 08. And you're seeing these huge spikes up. And I mean, just look at the range that the 2-year yield has had right now. I mean, it's amazing. Look down there. It's never had a range that low before, going all the way back to the 80s, it looks like right there. And I mean, and then the spikes up to it. The only other times to beat this is 08, and then right in 1995 right there, it looks like. And then in basically the late 80s. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And then here you got the stock market, where the VIX has just been kind of like, it's biting a little bit today. But nothing much going on, just very subdued. So it's the bond market that's having the ups and downs. Because remember, these yields, it's like, why are they going down? Because the bond market said, hey, the economy is slowing, Fed's going to have to cut. That's just all there is to it. That's why they're doing that. That's why the 2 years below Fed funds rate, that usually signals a pause. And again, they're saying, nope, they're going to have to cut. They're not going to put a hold for 6 to 12 months, whatever the Fed's trying to say they're going to do. And so that's what, as I showed you yesterday, a lot of this is based off of right now. We're going to go into the charts, but then something more importantly after that, we got to start looking out for, okay? And maybe this is what the market's going to wait on. We'll figure it out. But what did the S&P, I'm going to keep this very simple. What did the S&P do? It ran into a wall. It's as simple as that. It came up here. We talked about the level, 411, like 50, 411, 60, somewhere in there. Boom, hits that trend line we've been getting wedged into for months and months. Rejected, then came up, tried it again, and usually the second rejection is the big one. So went down, see you later. Again, though, the reason it's hard to go down, you got these big supply. That right there, that line was actually supposed to be like the daily move, the bottom of the daily move, but it broke through that, retested it twice, got rejected twice. But below that is a huge demand zone, okay? And you can just see right there, it just touched the very tip of it. And so again, the QQQ, what did it do? To me, again, it was the RSI was getting overbought and everything. The MACD looks like it wants to roll over, but I think it's in no man's land right now. And what I mean by that is it broke through this major, hurdle or major resistance, right? And then it's just sitting in here where it's been before, okay? And it's been rejected multiple times in this area. But it's like the buyers and sellers like, what do we do? We're hanging on. I don't know. Do we go to the golden pocket, the 618 fib? Not really sure what's happening with the yields. The yields are going down, so we should be going up, right? but that didn't happen today. And the dollar actually went down too, and it didn't happen. So that was kind of strange. Now, remember, the market is only made up, or at least the NASDAQ 100, that is, of basically 8 to 10 stocks, right? These are the 8 big ones, right? These are what makes, there's only 10 stocks makes up for what is like 88% of the move or something. And so you watch these, you'll know what's going on in the market. So all you gotta do is watch these stocks, right? And it only takes 2 or 3 to roll over to actually get the market moving. Now, looking at these, what do you got? Apple. And this is what you got going on with a lot of stocks. Again, they're sitting here at these major resistance levels. And of course, what's happening? It gets up there. Remember, they left a cliffhanger yesterday. They were sitting right above it or on top of it. And then, of course, it sits there in the morning going, I don't know, maybe we can stay above it, the little engine that could. And no, it sells off and gets right below it, but it's still sitting right there, right? Microsoft. Here's another one, right? I've been talking about this for a while with the members. You see it sitting at a major supply area on top of that trend line where it's been rejected 4 different times. And so, again, you see it gets up there, that trend line, rejects perfectly off of it, sells back down, and it gets into that supply zone on top of it. So you got 2 things going on there. Again, those make up the biggest parts of these indexes, right? Then you got Tesla. Nothing much to talk about besides the fact it just hangs on that trend line, right? There wasn't much going on with Tesla. There's the gap above. Again, hanging on to the trend line. If it loses that, we'll see what happens. Meta, very simple. I'll cover this every day. Again, no matter what's going on, this one was green, slightly green. They're just slowly stepping it up to fill that gap. That seems to be the game they're playing. Amazon looking for support/resistance flip here, okay? You can see this right here around 103, 104 area. It was support, then it was resistance. Now it's sitting there, it's right above it, so it's trying to see if it can turn this into support again before trying to move up. That's what everybody's kind of waiting to see. Again, we've been here, this goes all the way back to May. And so this is a game that's been being played since May. And so we'll see what happens there. Now, the thing we got to remember here, what's going on next week, starting on the 14th? You got earnings, right? This is going to be a big one like all of them are, right? Who's starting out with the earnings? Banks. So after going through all this mess with the banks and them being able to take on all the liquidity and the borrowing from the Fed and everything else, you know, we get to hear what they think and what they see happening with the economy as far as like, because obviously they have our money. So it's okay, what's going on? Because the savings rate has actually been ticking up slightly, but what are we doing, right? What are they seeing with deposits, things of that nature? Obviously, the regional banks are seeing a whole lot different scenario than the big banks. They're the ones getting the money. The regional banks are the ones losing deposits, right? And when you don't think things can really get more expensive, it's like, look at the technology PE premium versus S&P 500 right now. Look where it's at. So 38% right now. I mean, we didn't even get to see that when we went through that debacle or the bubble, what you want to call it, going from like 2020 up through 2021. You know, I mean, you just look at it, it keeps just getting more and more expensive versus the S&P 500, right? And it's at its highest level it's been since, I don't know when, this only goes back to 2018. But, you know, I thought that was interesting. I'm not going to say surprising because that's what's been rattling all year, right? And you can see, I mean, that's just a huge trajectory with no kind of rest going up right there. That's just a straight shot up, which usually isn't good. And what do we got here? So let's look at S&P 500 technology sector, and this is EPSs, right? And just look at the financial sector EPS. Oh, Lord, just fell off a cliff, right? I mean, tech's been trending down, but look at the financials. That's a holy mess, and they lead off the earnings next week, right? Here you got earnings are now contracting across all indices, right? So S&P 600, 400, 500, and you can see they're actually negative now, but you know, trending down since January 2022. But the key to that is, guess what? Once again, I do have it. See, here's the bar. Well, for those who don't know in the past, we covered this. The bar is so low; it's been low for every earnings, right? They don't even have to jump over it. It's in the great. I think somebody dug like a trench and threw the bar in it, and then covered it up. All they gotta do is trip over it. I think are we still in that? We're gonna find out. Are we still in that scenario where it says, well, they tripped over it, we're good, right? Things still haven't fallen off a cliff, right? And I don't think it's not this earnings people are worried about. It's actually the next quarter's earnings. That's what people are worried about because that's when you're going into, May and June, summertime. And so that's not really may not be that great, right? And so, so this is, we'll see how the market reacts. We'll see what the earnings are. Maybe they're good. Right? Maybe you go, oh, they keep surprising to the upside. But the biggest thing people are going to be watching is the tech stuff. They're going to watch the banks first because the banks do lead the way. And with all this turmoil, we'll see how that goes. But again, it's supposed to be well capitalized and all that good stuff, right? But techs just had such a big run up, and something like especially Nvidia, things like that, they aren't cheap. They just really aren't cheap, right? And so that's what a lot of people are going to be watching, and we'll see. But I think again, it's not this quarter; it's next quarter that people are really worried about, and are thinking that's when you'll see earnings contraction, because margins have been contracting, right? It just depends on how forward thinking the market wants to be and how it wants to take in all this information, and if we continue to actually slow down. And what we're waiting for is not so much industrial; it's the services sector, right? That's 70% of our economy anyway. That's what people are waiting for, to start seeing major contraction. And so, what else we got going on? So tomorrow, guess what? More data coming out. We'll see how it's going to affect the market. All about mortgages, but then there's ADP employment change, right? Forecast of 200K, prior was 242K. We're going to see, is bad news good news, or how's it going to look? Then you have all the non-manufacturing ISM data coming out. And so the market will be looking at these reports. Some are going to, as you saw, are going to be pre-market. Some are going to be around that 10-10.30 range. So again, let's see if yields for the third day in a row drop off a cliff. Right now they're green as I'm recording this. They're red, after 10. And so we're going to have to see about that again. 2 days ago, when I started doing a video, they actually started to, they had always cuts projected, and then they said, oh, maybe we're, too aggressive on that. And then the manufacturing data started coming out, and boom, they fell off a cliff again. So, it's going to be interesting times. I mean, again, we've never seen anything like this, guys. It's the first time in history you got yield curve inverted like they are, and it's just so many different things. And employment, at least unemployment is going to be the big thing this week. But an employment market like we have right now, and again, you got to lose your jobs to get inflation under control. That's what the Fed is saying. That's the only tool they know how to use. And so that's where we're at. We're going to see if they're right or not. We'll see if there's still a soft landing or no landing or hard landing or whatever landing you want to use, right? So if anything, it's going to be some fun times this week, especially next week going into earnings. Lord have mercy. Just buckle up for it, okay? So hit the like and subscribe button if you got anything out of it, and I'll see you tomorrow.